Moving on to the markets, the Nigerian all-share index is still flat in early trade today. Of course, it was up yesterday. Unilever leading the losers. At the moment, International Energy Assurance, ETI, and UBA also in the red at this point. Let's now cross to the stock exchange where Andrew Sacco, an analyst at Investment One, is standing by for some views and commentary on the market. Thank you so much, Andrew, for joining us. So, what's your take on the market? We did see it move up yesterday. One gets the sense that it was just a blip. Do you get the sense that that is the case as well?
Yeah, well, signs from early trading thus far indicate positive sentiment. I think this is likely to hold sway for the rest of the week. If you take week to date, we have seen an increase of about 63 basis points on the whole, and therefore, for the market to close the week on the negative, it means we will have to lose at least 63 basis points. But so far, we've seen some gainers, one principal being Nigerian breweries, and the lackluster types of just international breweries, but a few others too on the gainers chart. So my take for the rest of the week, hopefully, is that we'll end on a positive note.
Well, of course, it's just today, and we'll see if it plays out like you suggest. But let's talk about the sentiment around brokers. We do know that in the past, brokers really were the driving force to a large extent in terms of the speculative activities that they get into in the market. We don't get the sense that a lot of that is happening right now if you go by the volumes that we're seeing recently. So your take on the sentiment of brokers to engage in short-term trading on the NSE?
Yeah, well, overall, of course, opportunities do come up for both brokers and investors at large to cash in on opportunities as they do emerge. And it's certainly not a one-off experience. It's a continuing experience that you'll daily see in the marketplace. So basically, the downtrend in terms of volume has largely been the cause of cautious trading on the part of both traders as well as investors. And therefore, anytime you do see this kind of mood in the market, of course, the latitude exists for those who see opportunities to cash in, but largely a number of people are waiting for who will move the first finger. What we saw yesterday basically was that some correction has taken place in key stock prices, and I think that opportunities still do abound. We are likely to see a repeat of what happened yesterday, but by and large, I think fundamentally a good number of stocks present investing opportunities to the larger investing public. A lot of prices have been significantly moderated. If you look at the likes of First Bank, Zenith, they have trended downwards to almost year low levels. So for discerning investors, I would advise that they watch out for such moderation in prices and then begin to take up opportunities again.
All right, XGen, the new trading platform, is something that a lot of people are expecting. Should take off this month. How are you gearing up for that at Investment One? How is that changing how you're approaching your potential and, of course, current clients?
Yeah, we'll continue to look at stock specifics, companies that have underlying fundamentals that are readily sound and perceptive. We'll continue to advise our clients to key in to emerging opportunities. By and large, of course, the fixed income end of the market has, to some extent, offered some proximate alternative to the equities market in terms of the acreage in interest rates that we saw some weeks past. But of course, on a continuing scale, the equities market, year to date, as we do know, have returned approximately 30% return. That more than compensates, for the appetite of the equity investor, while of course the opportunity for the fixed income investor does exist. So it's a mixed bag, sort of.
All right, and if we stick to that discussion around fixed income, to what extent do you think this is weighing down on equities right now? You can easily get yields of about 30% in the bond market right now. Do you think this is something that is dragging the market, or is it more of the seasonal effect that a lot of people have been talking about, that in the third quarter the market tends not to do too well?
Well, on a continuing basis, both ends of the market present opportunities. Of course, you know that the risk appetite for investors differ. Whatever the rate of return in certain segments of the market, investors are likely to decipher and then decide which market they are most comfortable with. So on a balance, you will see on a continuing basis those who would rather want to hold their portfolio significantly on an equity biased level, while others may want to trade in the fixed income end. But all said and done, we saw that the increase in interest rates was largely informed on the CRR decision and policy of the central bank with respect to deposit bank funds which come from government. So banks have also been able to adjust to that reality by trying to source funds outside of that segment of the market. And by and large, that has been factored into valuations. And that's why we will continue to see interest rates trending downwards. Of course, the anticipated yields increase in bonds have suffered constriction, and therefore that has also presented another opportunity, of course, window for investors to begin to look again at equities.